Hello and welcome to today's morning report on Thursday, the 15th of September with me, which pro-market analyst at Handset Markets. We've got a relatively cautious open on these European markets, basically sort of trading around the flat line on DAX and FTSE and CAC. All those mild underperformance from the CAC, but still, you've not really seen too much in terms of direction. You had a sort of neutral to slightly lower close on Wall Street, and also the Asian markets were lower, but I think markets are generally cautious. You've seen a bit of dollar strength coming back into the markets this morning. Dollar is actually outperforming against all the forex majors, although the Aussie is holding up fairly well after the employment data that it had was positive overnight. But interesting moves that we're seeing on treasuries. Actually, you've got seen the 2-year, which is sort of just buzzing around, really, not really doing a great deal, but the 10-year is pushing higher, and that interestingly is pushing out the spread between the 2s and the 10s, and that is the highest now. The spread's the highest in 3 months now, so really interesting move that we're seeing on those treasury yields, and that is certainly helping, I think, the dollar. In terms of your commodity prices, they are being hit, and the oil price flew around yesterday on the oil inventories report as per normal, but the surprise inventory build of distillates certainly did not help the oil price yesterday, and it got sold off into the close. It's sort of basically supported today, but again, really is under pressure, and it seems to be moving back towards a test of that 43 level now, which is the September key low. So yeah, just generally speaking, markets are fairly cautious with this dollar strength. You've got obviously the BOJ and the Fed next week, and just a little bit of dollar strength in front of that, but it'll be very interesting to see if the markets can gain direction, because I don't think they will. But there is a huge amount of data that we've got out to look forward to today. You're going to start off with the UK data. Basically, you've got retail sales and the Bank of England today. Retail sales at 9:30, expected to just drop slightly, but last month was shoot the lights out on retail sales. Just very slight sort of drop back on the month-on-month. Ex-fuels data 0.6% down on the month, but certainly the holding up around 5% is decent numbers for the UK in terms of retail sales. And then you've got inflation for the eurozone confirmed, likely to be confirmed at 0.2% for the month. And then you've got the Bank of England at 12 o'clock noon time UK, and it's not expected to change rates, but you could see a bit of a sort of a steer for future rates to be changed, but the actual rates are not actually expected to be cut or quantitative easing increased, but you might see a bit of a sort of a guide towards lower rates in possibly November. In the afternoon, you've got a load of data out at 1:30. You've got the New York Fed manufacturing. New York Fed manufacturing, that's Philly Fed. Here we go. New York Fed manufacturing expected to come out at minus 1.0, so below the flat line. Philly Fed is the only one of the sort of regional Fed surveys that is currently above neutral, or one of the very few anyway, and that's expected to drop to 1. So there's not really going to do, these two regional Fed surveys not really going to do a great deal, but the market will be focused on retail sales for the States. Now that's expected to come at plus 0.2 for the month. Let me show you the rest of the list. Plus 0.2% on the ex-autos retail sales, this is, so adjusted. And that would, again, not really do a great deal for the dollar, you can imagine, but might be a little bit supportive. But then also you've got the industrial production numbers, industrial output expected to be at minus 0.3, but also capacity utilisation to drop slightly to 75.7. So, again, sort of a little bit of slight negative would be this afternoon for the dollar, but yeah, lots of data to see the dollar flying around this afternoon. So that takes me to my chart today, which is silver. Now the precious metals have come under pressure in the last week or so. Very slightly found support yesterday, and silver sort of holding up above that 1870 support that we saw on Monday. That level has sort of remained intact throughout the last few days and remains so today. Is this the start of a recovery? I think, generally speaking, silver's stuck in this range bound, in this range really, you could argue. It's not really going anywhere for the medium term. It's sort of dropped below that 1920, which is the pivot line within this band. And 1920, I can show you on the daily, on the hourly chart, is still a basis of resistance. So 1918 was a reaction high on Monday. 1928, so slightly above that on Tuesday. But generally speaking, 1920 is sort of the basis of resistance that we have on silver in the medium term. In the near-term pivot on that silver chart. Silver's interestingly holding up still with this 89-day moving average. Currently comes in at 1860. So the support of that low from Monday is around about where that 89-day moving average is. So that's interesting as well. You've got these momentum indicators which are basically flattening off. I think ultimately what we're going to see is markets generally, anything dollar related is going to just consolidate in front of the Fed, and I think already what we could be seeing is silver doing the same thing. Now gold is taking on similar characteristics, but certainly silver is sort of consolidating, you could argue. There you can see in the last few days it's been very tight of range considering how volatile silver has been in recent months. The RSI has been tending to fail on the hourly chart around 60 point, moving back towards sort of below 30, but subsequently has sort of found support around 30. So a very mild negative bias, but nothing too significant. Those MACD lines on the hourly as well, sort of failing around neutral, but nothing too significant in terms of the bear. So I think it's more to the fact that it's consolidating rather than anything really negative. So I wish you good luck in your trading on silver today, and I'll speak to you later. Thank you.